If you're a doctor or other professional with medical or nursing school debt, you may be eligible for a no down payment physician mortgage. These provide a workaround for those who expect to earn more money in the future, but might not be able to save for a down payment due to debt. Save for a down payment now due to debt. I want to be clear. If you can't save for the down payment now, don't go get the mortgage. In short, you already got a mortgage. It's your damn student loan debt. Whew, why doesn't it say that? It's like, oh no, they got too much debt. Yeah, their student loan debt is a mortgage, just based off the flat out dollar amount, not based off the interest. I mean, my goodness, sometimes the interest on these student loans just make you want to pull your hair out. Low down payment mortgage options. Here we go. So now we got low down payment mortgage options. If you're not eligible for a true no money down home loan, you might still be able to buy a home with the next best thing, a low down payment mortgage. Isn't FHA already 3.5%? No, conventional is 3%. FHA is 3.5%. Like, what are we talking about here? You're going to pay off 97% of the loan. If you know anything about percentages, 97 and 100 is the same thing. Unless you're getting a test score, right? Unless you're looking for results where you want, to be 100% or not be 100%. You got to pay off 97% of the loan. Then when you add in the PMI, because you got to pay 97%, 96.5% of the home, you got to pay the PMI. Man, 3% conventional loans, Fannie Mae and Freddie Mac, the two government-sponsored enterprises underpinning mortgages in the U.S., back several 3% down conventional loan programs. Conventional 97, Home Ready, Home Possible, Home One. Each of these require just 3% down, but also private mortgage insurance. Again, the VA loan, zero money down. And on top of that, you don't have to pay the funding fee. And a lot of times the people don't like the funding fee. But again, most people are not well versed enough in the benefits that disabled veterans, should I say, have access to. Let veterans first, then disabled veterans. You gotta be a veteran before you're a disabled veteran. A lot of people aren't aware of it. A lot of people's military experience on the financial side is dealing with people who are active duty, and so by definition, they can't be a disabled veteran because you can't receive income from the DoD and the VA at the same time. And so they still have to pay that funding fee. But if you talk to you talk to someone who knows about 100% PNT or a veteran that is 100% PNT, yeah, different conversation out here. All right, because they can just put 3% down on the VA loan if they want to. They can do 0%, and then no PMI because they disable veteran. The cost of premiums varies by program and individual buyer. FHA loans, again, FHA, Federal Housing Administration, only requires 3.5% down with a credit score as low as 580. See, it's interesting. They're supposed to do all these things and make sure we don't have another 2008 crisis. But when I come here and I share this damn tab, let me make sure to share. Look at me. See, got me cussing late at night. What does this say? Lowest possible credit score is 300, but it's unlikely that anyone has a score this low. Credit scores typically range from 300 to 850, and they can vary depending on the credit scoring company and when they were calculated. For example, FICO considers scores below 580 to be poor, while Vantage Score considers scores below 500 to be poor. I want to be very clear. I'm trying to pull up this chart so it's easier to see. So this is for the FICO score. We got poor being from 300 to 580, fair being 581 to 670, 671 to 740 is good, very good, 740, 800, then 801 to 850 is exceptional. I want to be very, 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 very clear. When it comes to credit scores, you either want to have no credit or in short, perfect credit. Let's just call perfect credit here 760 and up. I don't want to get into it. It says very good here, 740. So let's say 740 and up just to stay with this picture. If your credit score is not 740 and above, you put yourself in a situation where you have no credit or do what you can to get above that 740. Having bad credit is arguably third worst thing. If you want to show me your financial situation, back taxes is going to be the very first thing. You're like, child support, alimony, things like that, where you're sure you owe the government. those are going to be the worst things. Then student loans, and then a low credit score. When you have a low credit score, there is a lot that you can't do until you fix your credit score. because now your credit's bad. And so now you can't take out any debt. Like, say we're in a situation where you want to get out of debt, but you're in a situation where we can sell a car, sell some things, and then we just need to take out a loan to cover the difference, and you'll be in less debt overall if we execute this, take out debt plan. But your credit score is too low. Obviously, if you were able to take out debt, you probably wouldn't be in the situation to do a debt consolidation, which you shouldn't do. But if you're able to go get debt, if you had a good credit score, you wouldn't be talking to me right now. But you don't, and so that's why we're in that situation. Oh my goodness, it's just crazy where it says 580. Like, if your credit score starts with a 5, just cancel everything and pay everything off. You don't need to have no more credit. You failed the test. If you have a credit score between 500 and 579, shoot me now. Anyways, you'll need a higher down payment of 10%. What are the chances that people with a credit score between 500 and 579 have $10,000? Let's say the home is $100,000. They have $10,000. What are the chances they have $5,000? Let's say the home is $50,000. All right. The average home in America, though, I believe, is over 400. Average home price, America. Average home price in America is, drumroll please, $424,000. $425,000. That's July 12th. That's the last week. It's not even a week ago. Today's 16th. The median home price is $450. Oh, this is Laurel. Jesus. I was about to say, ooh. That still says average. I want to get median. Median is $387. So let's just call it $300,000. You're telling me that there are people out here with a credit score between 500 and 579, and they got $30,000 saved? That's a damn lie. Not liquid. Maybe in a 401k retirement account, but they don't. And their employer helped contribute a lot of that, right? 10% down for a mortgage. A lot of people don't put 10% down. That's why they have the 3.5%. 3% for conventional, 3.5% for the FHA. So you're talking about that you want people to have more than 3 times that for 3% and a little under 3 times that for the 3.5%. Come on. Similar to PMI, you'll pay FHA mortgage insurance with an FHA loan. However, unlike conventional PMI, you'll pay FHA premiums for as long as you have the mortgage. In most cases, yeah, sometimes I think it's 11 years or so. But a lot of times for FHA, you have to pay it the whole time. Insanity. Imagine paying this mortgage insurance, FHA mortgage insurance premium for the length of the loan for 30 years, all because you didn't put more than 20% down, which if you would, or could have, you would have went the conventional route. So in short, the FHA, I believe it's FHA. If you look at the genesis of it, it's for poor people.